Hi, my name is Matthias, and today we're going to look at APIs in banking and the role of APIs in bundling and unbundling. Now, what are these concepts, bundling and unbundling? Why do they play a role? Well, the concept of bundling is actually something that we take from the business side. It's a business concept where you take two or more parts and then you combine them to create something new, to create a bundle. For example, you have Lego blocks, and out of those Lego blocks, you're going to build by bundling them together a new Lego figure. And then this bundle is what you're going to sell, what you bring to market. Okay? The reverse of bundling is unbundling, and you take that little package that you have there apart into its constituent parts, right? So you unbundle it into its Lego blocks that is actually built out of. Now, once you have taken things apart, of course, you're going to build something new with it, right? You have those Lego building blocks now in your building blocks, and you're going to rebundle them and create something new out of it. And that's the whole idea of rebundling. Rebundling can actually be in two forms. One is just taking the same parts and putting them together in a new way. So what used to be a spaceship before is going to be an animal later, or something like that out of a Lego block. But you can also add new parts to your Lego building box and then create something new because you have just new parts in the box. So as you can see, it's typically a cyclical process, and everyone who has seen a kid play with Legos knows that this is really a cyclical process. You start by bundling things together, then you take them apart, you unbundle them, and you rebundle them and create something new, something hopefully better, out of those parts. Now with APIs, and now we transfer this concept to the technology domain, so from a business domain to a technology domain, you can think of the building blocks as APIs, right? Those are the constituent parts that you can bundle together, and when you bundle them together, you get a bigger service, a microservice mesh, for example. But you can also think of when you start with a big bundle, that could be your monolith, and you can take this big monolith apart into its constituent parts and decompose it into microservices. But now let's transfer this concept even to banking. So we start with the past, we're going to move into the present, and then we're going to come to the future. So looking at the past, banking as we know it, and there you can see that we start with the concept of bundling in the past. We'll then move in the present into the stage of unbundling, where we have open banking and open finance, which kind of leads the way into an unbundled world, both on technology side, but also on the business side. And then you can see the cyclical nature here again. And when you put the cyclical process onto a timeline, you get the sine waves, right, that we see here, where you have bundling, unbundling, and the next step will very likely be, because of the cyclical process, a rebundling. And the rebundling is probably what's going to play out in the future. And one of the things that we see in the future is actually banking as a service and all the things that banking as a service actually entails. And we're going to look at this in one of the next videos. But first, let's look at banking as we know it. Banking as we know it is focused on efficiency and the mass market. And that's very good, right? You have, from an efficiency perspective, all these different types of banking products that you bundle together into a mass market banking offer. Let's look at it. You have a current account, you have a trading account, you have a mortgage, you have a retirement account, you have a savings account, or credit cards. And you bundle all of them together into a mass market banking offer. So it means if you have a mortgage at one bank, you're very likely also having a checking account at exactly the same bank. And it's because of the bundling into mass market banking offers. Now let's move to the next step in that development, where we are now in the present. And in the present, we see all over the world open banking and open finance emerge, where you take that mass market banking offer and you unbundle it. You unbundle it in terms of APIs. You have now a credit card API, a current account API, a saving account API, and that's what we call open banking. Of course, you also have payment associated to those bank accounts. But it continues with open finance, right, where we now have retirement accounts, trading accounts, mortgage accounts that are also in the process of being unbundled from this mass market banking offer. So if we look into the future, we start where open banking has kind of left off. We start with all those APIs that open banking and open finance has produced. So those are the APIs of the financial services industry. And now, these are not the only APIs on the market. We also see APIs from other industries. So for example, from logistics, insurance, accounting, business management, communication, transportation, all these different industries also produce APIs. And basically, financial services industry and all the other industries are adding Lego building blocks into our box of Legos that we can now rebundle, right? And that's exactly what we think is going to happen in the future, where we now have some type of rebundling. And this rebundling will take the form of horizontal integrations, very specialized embedded banking offers. So that's interesting because now when you look at those banking offers, right, they are consisting not only of banking APIs, they are not staying in their vertical, they are now moving into other verticals as well. So you see there's the black building blocks from the financial services industry combined, for example, with logistics, or combined with insurance, or combined with accounting and business management, or combined with transportation. So now you have all these different verticals that produce niche banking offers. So here is Judy. Judy is a musician, so she's happy about her banking service because this banking service is a banking app created just for musicians. So remember, we have now a niche banking offer that takes in not only APIs from the financial services industry and building blocks from the financial services industry, but it takes into account building blocks from other industries as well. For example, here from the music industry, what musicians care about. For example, they care about their income streams and their revenue streams, which are very different from a 9-to-5 job where you get paid every 2 weeks or every month. You get paid from your streaming services that you publish your music to, for example, from Spotify. And they can see their current stats, and the current prognosis on what they're going to get paid from those different services. Now, interesting is that what Judy describes as her bank is actually not a bank, right? So they say themselves, hey, we're actually not a bank. And here's another example. This is Mike. Mike is a busy professional. He's traveling a lot. He's a frequent traveler. But in between his trips, when he boards the plane, he wants to take care of his finances. He doesn't have a lot of time. He has several bank accounts that he wants to stay on top of. And there is a new app that helps him do that. It's a multi-banking app where he can, with one login, basically see all of his different bank accounts. And this is ideal for him as a busy, frequent traveler. And this app is not created by his bank. This app is created by his airline that he flies a lot with. Right, and it's combined with his airline loyalty points, and it's especially made for people like Mike. So that was a quick look at the concepts of bundling and unbundling and how they apply to banking, what we can see about the future of banking by applying it on a timeline. We've also seen that niche markets will play an increasingly big role in banking, and APIs will help you to leverage that market efficiently. We will look more in detail how you can do that, because a niche market is very small, right? You want to address a large part of the market, a big market segment. But all these niches taken together will constitute a very big market in themselves. And we will just need to have a way to efficiently address all those niches in one go. And that's what we'll see in the next video. Thanks a lot for watching. My name is Matthias. This video has been sponsored by Software AG.